Everyone. Today is Tuesday, April 17th. Welcome to the Hurley Investments financial commentary. It is a Tuesday night. I am starting off today in response to a couple questions I've had over the past 2 to 3 weeks. And really it comes down to, Kevin, how do you do it? How do you do what you do? How's he able to stay calm? How have I created these patterns or these habits that allow me to do what I do as I manage money in the stock market? And I thought that I would share that with you tonight. That I'd literally go through some of the steps of what I do on a pretty consistent basis so that I can explain to you what I'm doing and why. Sound like a plan for you tonight? I guess actually, would that be helpful for you tonight? All righty, good. So literally every Sunday afternoon, I spend a little bit of time and I will most likely pull up my midweek. And I take a peek at what I'm going to do. It'll be the 17th, and I try to save it so that I have a new one ready to go. And this is my basis for doing my whole week. I literally just start off figuring out or thinking to myself, what can I share this week that's going to be helpful or interesting? And I go back to the last Tuesday on anything that's happened between last Tuesday and this Tuesday. As I thought about last week, obviously, the question was, how are you able to be so calm over the volatility we've had, and how do you do it? Were the two questions that came up over and over and over again. I'm as you ask, if you ask my kids, I'm old school, meaning I still use a planner. I literally use a planner much like this, and this is how I decide or start off my week. I am trying to fill in my planner with nothing more than the ISM services, pending home sales. I write where I'm at. I write money I have under management, how it grows or doesn't grow through the day. I write my phone calls. In fact, I bet if I went down this time, I was teaching a class, I had a chat session, I was teaching a class. So literally, there are some simple steps that maybe I go through, and Abraham, I'll answer your question as well, maybe that I go through that prepare me for the week, whether it's volatile or not, where literally I can do nothing more than just fill in my expectations for the day, my expectations for the week. You'll notice over here I've got consumer credit on the right-hand side. Let me get a pen color here. Where I find out why consumer credit is, I write it in. I go ahead and I write a little slash. This time it's supposed to be a negative 1.4 billion. Maybe it comes in at 2.0. And so I just write it in. I give myself a record. If I'm going to write any of the ticker symbols for companies I'm going to watch, like for Monsanto. I'm going to write if they had positive or negative earnings, meaning if they beat top and bottom line. And I literally draw an arrow if they go up or down. Chesapeake Bay Bank probably had negative, went on down. WD-40, probably negative, went on down. PayPal probably was positive, went up. I obviously don't know what happened for this week, but I go through and I literally spend my time doing my research for this class. It holds me accountable, and I start to put my pieces into place. I don't know what's going to happen each week, so obviously I'm not going to have what's happening and why. I don't know what's going to happen on the market each week, but I want to make sure that I'm really spending time going through and doing fundamental market research. For me, that starts off with looking at technicals. I look at my technicals for the market along the lines of an institutional trader. So I'm going to do it Sunday afternoon. I also will obviously do it daily, but in this case, I take a peek if it was Sunday afternoon, and I'm going to have our market right here, our nothing more than a 6-month chart on the S&P 500, the Dow, and the NASDAQ. Out of curiosity, am I looking at a 20 and a 5-day crossover on my indexes here? Oh, it's a 50 and a 200. So instead of a 5 and a 20, I'm looking at a 50 and a 200. Abraham, why might I be looking at a 50 and a 200? Why might I be looking at 50 and 200? Institutions look at it. There you go. I'm looking at what big money looks at. I'm not interested, as I'm doing my daily or weekly analysis of what I'm going to look at for the next week. It is not important to me on what I need to see on a 5 and a 20 day. That's not going to matter to me. I'm looking at a longer term time period. I'm looking at what I might see if I was big money and where big money might be putting their money at. What could move the market? Well, Kevin, I do more spread trading. When I was doing more spread trading, I still looked at the market in general. I would not be placing a spread trade. Excuse me. I would not be putting a spread trade if I saw an index at the 50-day or down here touching the 200. It would give me an idea, but why would you put a bullish spread trade at this point to then see it go down? Well, Kevin, what if it breaks above? What if play probabilities? I want probabilities on my side. More often than not, the 50-day acts as a resistance level to upward trending positions, like once, like twice, like 3 times, like 4 times before maybe we're breaking above right now. So if 4 times I had hoped that it was going to break above, I would have been screwed in a spread trade. Really would have been bad, because this one could have looked really interesting, or this one could have looked really interesting. but it's much easier, much fewer crossovers on a 50 and a 200 day, because that's where big money is setting up resistance and support levels. When you go horizontally, I bet you, especially with the gap right here, we're going to see some resistance at the 25-40 range. Horizontally, this is where orders were stacked up to buy and sell. I bet if we took a look from 25 down to 23, that's probably awfully close to 10%. And institutions are disciplined that as they put their money to work in buy orders down here, they're going to have some sell orders up here to book a profit. You know who doesn't do that? Who doesn't book a profit after a 10% return? Who's the one that gets a little greedy? Or we're not at tops of tops or bottoms. Who doesn't do that? Who doesn't book those profits after a nice 10% return? It's the retail trader. It's, with all due respect, it's the dumb money. It's the dumb money that doesn't consistently follow those Fibonacci's. That's the money that that people, for plain and simple, they don't use the thought process behind, hey, if I've got a profit, I'm going to book it. We're looking for 20% returns, 25% returns, which we may get in that movement up. But we are not disciplined in any way, shape, or form to take profits like you see a institutional trader or a fund manager or a hedge fund manager or a money manager is. Now, one of the comments was made, well, maybe you can show us what we did. And again, I try to help you go on a weekly basis on, hey, I'm doing this, I'm doing that. But again, because I do a lot of because I do not do a lot of spread trading, do a lot of collar trading, the question was asked, well, what were you doing during these times? Help us understand. I just put on my protection quicker. It was that simple. How did I make it through these weeks? I decided, you know what? It's too volatile for me. I'm going to go ahead and put my protection on ahead of time, which means, yes, I've got some protection that's going to be on lower than at the money positions. I'm okay with that because I may run those positions out of the money for the long puts. Or I may add just a couple other long put contracts at the money so that I can have my delta a little bit where I can make 40 to 50% on the way down. That's always my goal. If it's going to go down, can I make up out of the gates 40 to 50% and know it's going to go higher? We did get technical crossovers just most recently on our three indexes. On Sunday, we were close. But on Sunday, as I primarily focus on the S&P 500, because that's what I'm judged against, my thought was, hey, I was looking at it a little bit differently. My thought was, I wonder if we're going to get above this 2660, because we didn't hear support there, had a little bit mixed in here, little support here, resistance here. 2660 was a pretty good level. So as I looked on Sunday, we came back and finished at it, a little bit below it on Friday. If you had asked me on Sunday, I would have told you we're probably going to look at testing the 50-day, or on Monday, if we were going down, we're going to go back down and test the definitely going to go back down and test the 200-day simple moving average again. Well, yesterday was a day I sat on my hands, not making adjustments, not pulling short calls off yet, where I've got a lot of profit. I did add a lot of short calls to my callers. But as we were breaking that 200-day today, I'm going to wait one more day tomorrow, and I'm going to take a bunch of profit on short calls that were put on, and or extend my short calls out and up on a bullish day tomorrow if we have it. I'm looking for 2 or more days to verify we'll stay above. I do have crossovers on my RSI. I do have crossovers down here on my MACD. This could be for real, where we're going to go back up and test some highs in our market. I usually look at my thesis if I'm going to believe if we're going to follow through with a negative or positive April. I think this is going to change. So right now, on Sunday, I looked at it and I thought, you know what? I think I'm looking at a flat month. Well, maybe I can't say it's flat because we finished at 26.40. We're at 27.06. As I thought on Sunday, I would have said a flat month. A couple days later, my thought process has changed. I'm thinking a little differently on what I believe. I'm looking a little differently at what can be different if we do break that 50-day. I looked yesterday and we had to flush out our sell orders. That's why we couldn't hold the highs for the day. That's why we couldn't hold the profits. We were flushing out some sell orders, especially on the close. I think it was $1 billion on the close. So we were down yesterday. It was just a matter of thinking, hey, I think we might finish flat, because I did expect it to bounce back down, maybe go up in the next couple of weeks. It's nice that we should have had our tax season over. No more selling, letting things clear in 3 days, hoping the government doesn't cash your check to pay your taxes, right? We have an extra day. We had an extension because the IRS crashed. Their website crashed. So we get a day extension for paying our taxes. I don't think that's going to matter, though. I think because we've got that behind us, tax selling behind us, we could see our markets go higher. But if you had asked me on Sunday when I prepped all this, I would have said, hey, I think we're going to be flat. I'm going to change my thesis to being flat. I look at earnings. I build about this time because I knew, it was actually a week ago, I would build my earnings list. So again, I built my earnings list a couple of weeks before Alcoa reports. So I look at what I trade. Apple, 05, 01, after the market closes. Kevin, where do you get this list from? Where are you finding this? I primarily go to my Options House or E-Trade account. I go through my No Parker accounts and I'm taking a look at the earnings because I like that they confirm it. So most everything I do will be here where I make my confirmations, where I'm going through everything and I'm making my decisions on building my list, where I've seen for the most part their earnings tells me when it is, after the market closes, during the day, or before the market opens. And so I go through my watch list. And my watch list is over here on the right. I don't do all of these, but my active watch list, where I have active positions, I build an earnings watch list. American Outdoor Brands Corp is somewhere around the middle of June. Bank of America is, it was yesterday, 16th, before the market opens. Great earnings, by the way. Baidu, still undecided. It is estimated around the 26th, estimated. Disney is on the 8th after the market closes. Ford is on the 25th after the market closes. Facebook is on the 25th after the market closes. FCX, Freeport McMoran, on the 24th before the market opens. And literally, I just build this list. I do my research so that I've spent my time so when I know what's going to happen, when my earnings are going to come. Altria, 26 before the market opens. Visa, 26 after the market closes. Zions Bank Corp, before the market after the market closes. And Under Armour on before the market opens. So I've got my list where I've got my earnings in place, and little interesting on my earnings. Dang it. On my earnings, so on my earnings on this example, I have CRM, and I will take the time to research. After the market close, I will draw a line here and I'll go through and I'll research, like on Bank of America. They were expected to have 59 cents on 2.3 billion. Top and bottom line. I have it written out there, so when they come in at 62 and 2.31 billion, I write this information down, so I'm literally collecting information where I can go back and check previous earnings. I don't have to go to a chart. And yet, ARAM, for the most part, I'm only looking at my earnings from my watch list there. I found E-Trade to be very reliable, in which case I'm not going out to other places for earnings. But I do like that when I am looking at their earnings and so forth, I usually like to check the news. For example, they do an app form. For example, when Bank of America announced their earnings, they had, they listed in here. They listed in here and off we go. So I like to see some of the confirmation in the news when it's out. But yes, primarily right here is where I get my earnings information from. All right, so when it comes to other earnings that are outside of my active trading list, I run off to briefing.com. I go to their calendars, their their earnings calendar. I haven't seen this one before. And there we go. And literally, I will go through this week and I will do a full listing. And for obviously yesterday, Bank of America was one of mine. Here's where I got my consensus from their earnings per share. Charles Schwab, I don't do JB Hunt. Selling us Netflix, I know is a big one. Pinnacle, Wintrust, not important. So for yesterday, I wrote down Bank of America, Netflix, and Charles Schwab. And then I spent my time seeing if they beat top and bottom line. Charles Schwab did. So I had a plus, but they were down yesterday, I believe. Netflix beat top and bottom line, and they were up after hours yesterday. They were up today. So if I'm going to write them down, I'm going to spend my time making sure I'm just not writing a bunch of gibberish in here, because it's my job to keep track of that. For today, we had Goldman Sachs beat and they were up. We had CSX, IBM beat and they were up. Johnson & Johnson beat and they were up. Progressive, United Airlines. I go through and I make sure that I'm going through this. We also had for today Intuitive Surgical, one that I followed for forever. But what I'm doing is I'm literally pulling up the full listing, and it can get quite long, and I'm going through to track the stocks that I track, to also see others that maybe I don't track, but that I am I'm looking for patterns. For example, Interactive Brokers reports today. I take a peek on that one because on Thursday, E-Trade reports. I want to see how they are doing. Nice to see Interactive Brokers beat on the top line. When General Motors reports, I pay attention because I trade Ford. When any of the FANG stocks, I pay attention because I trade Apple and Baidu. When Alibaba reports, I pay attention because Baidu is one of the ones that I also trade. I'll follow NetEase to see how China is doing. I'm looking for patterns where like companies and like anything that can relate from one of my companies to another. I'm looking for those patterns on what happens with one company, if that'll follow through and relate to another company. Obviously, what's the pattern that we're expected to see in the financials this quarter and really running into next? What pattern are we expected to see that's being mentioned over and over and over again through the financials? Up, up, up. There's a different pattern that's causing that up, up, up. What is it? It's also the same with, well, I'm not going to go there. It's tax savings and it's volatility. Tax savings alone could bring a 20% increase in profits and revenue to the banks. Not only that, but also with tax savings, the volatility is helping their trading desks as they churn people's stuff in and out of the market and finally into bond funds that are back up for a while, for a little bit, back up to 3%. Hey, it's back up to 3%. We can move you out of these lower paying stuff I got you in a couple of years ago and get you into stuff that's twice as high. Go from 2 to 3.25%. 50% more profit on your interest. There's been a big move in churning people's portfolios and bond funds. So that obviously with the more volatility and the higher interest rate, you can move people in and out and really generate more revenues through churning. Don't stay in this fund more than 2 years. Let's move it over to this one. It'll pay you much better. Yes, I'm being facetious. I'm kind of teasing them. But of course, they're going to do better when they can move people out of one group of assets into another. That's what these big houses get paid for. They don't get paid to make you money. They get paid to put you into stuff. So Tuesday, we had Goldman Sachs. We had CSX, IBM, Johnson & Johnson, Progressive, United Airlines, Intuitive Surgical, and Interactive Brokers. Wednesday, Abbott Technologies comes in, Alcoa comes in, Morgan Stanley comes in, U.S. Bancorp. We're in our second week of financials. American Express and Valmont Industries I follow. Granger Worldwide, looking on materials. Key Corp, Nucor. A lot of people say, do you really go through PM? PM is what is PM? Philip Morris. Do you really go through Philip Morris? Yes, because I trade Altria that does those e-cigarettes. So yes, I pay attention to Philip Morris. Wouldn't trade it, but I pay attention to it. E-Trade, Financial Corp. And Friday, PHE, Ericsson, General Electric. Wouldn't trade it, but I'm going to follow it. Honeywell, because it moves the market. Schlumberger for oil. Stanley Black & Decker and Waste Management. So there I create my earnings. Economic reports, pretty easy. Economic reports, I pull these one more time just off of my calendars at briefing.com. And again, nothing more than I bring up the full listing. Too many advertisements now. And again, I write it down. I write the consensus, then I write what it turns out to be so that I have an idea of what's happened, obviously, throughout the week. So, obviously, I would change these out because these aren't here, but pretty important. Housing starts. Nice to see those take off. Building permits, industrial production, and capacity utilization. Kind of a big day today. Tomorrow, Fed beige book, so nothing's going to happen until noon until we see what they're talking about. Usually the same thing with the Federal Open Market Committee. Nothing happens till noon that day. Thursday, Philly Fed, leading indicators. That's kind of a big day. And Friday we have nothing. Although I take that back. Friday we have options expiration. International. So we don't get caught with our pants down, right? I always head off to Wall Street. It's what I'm used to. It's what I read all the time. I head off to Wall Street. So on days like yesterday, I can pay attention to China GDP. Pretty simple one that you should know about, right? Industrial production. Two big ones right there. I also pay attention to what could happen on Sunday. These set our futures for the next day. Pretty interesting to see, and I'll pay attention to the China came in at a 6.8 GDP. Not bad for a country that's supposed to not be doing so well. Gives me, again, looking for like patterns, gives me more benefit and more belief that we'll see Baidu go back up to 270, where I'm not going to be so interested in rolling protection to follow profits, because not only did they just go through the Chinese holiday, not only are other Chinese companies doing very well, but dang it, that GDP is doing better than expected. I also like using both briefing.com because if you're not sure, you can click on it and you can get a general idea of what it is, what they're looking for, and it's pretty interesting. It really was expected to be in that 6.6 range. It ended up being up at 6.8. So obviously I'm going to follow my international stuff. I didn't see a whole lot that comes up except for Sunday. We have the Japan PMI, manufacturing index, and it's the flash number. I also, as I spend my time throughout the week, I do a lot of reading of news. I do a significant amount of reading of news. So as I'm going through and I'm seeing news events that I think are going to be interesting for you or relatively interesting for you, like Apple, time for the cash flood, I'm literally, as I'm going through and reading probably 15 to 20 articles each day, as I read a couple that I think will be pertinent or interesting for you, I literally just email them to myself, and I do nothing more than I have them on hand in my email so that I can copy and paste them and give you guys some information that I saw that I thought was extremely helpful. Not always do I run into information I think is extremely helpful, but as I do the best I can to email it to myself and send it off to you guys so that you're able to see it. This is my Sunday afternoon. This is my daily check as I'm going through and looking at my planner every single day. I make sure that I'm forcing myself in some way, shape, or form to do what I feel I need to do to be up to speed. Yes, I kind of do it somewhat for you guys on a Tuesday chat, but I think that holds me accountable to be paying attention to the market on a daily basis. Questions. How do you relate those economic reports to your portfolio? So, economic reports. as I go through those economic reports, to a certain degree, the economic reports I'm looking for are telling me more into industries or more into overall strength of our economy. For example, retail sales. I'm going to bring this one up really quickly. If I looked at retail sales, what I was really looking for was a longer term chart and seeing if we were going to continue our downtrend or not, if we're going to see a rise or not. I was really just trying to follow through and see if we were going to have a quarter that was heading back down or if we're going back up. I was looking for sectors, primarily autos and auto parts. This is also what I start to look at if I'm going to get back into retail like July, August, before you have a buying season for school. I sometimes will also look at this if I'm going to make a run through clothing, especially coming into summer, and if people are going to buy more clothes for summer. So I try to relate different economic reports to what I see or deem that's going to be important. Housing starts. More housing starts were going to lead me to believe that the banks would end up doing better through this earnings, and maybe banks are going to continue to run through the summer. As I take a look at that chart, I like the trajectory. I can't speak there. It's just simple things like that where I'm trying to put pieces together to see if it gives me a little bit of an edge or something I might see in my economic reports. Not to mention these economic reports, for the most part, guide our futures. You also asked market mood or direction, influence, or anything specific. Just in that regard, just in that regard to where people are putting their money. I spend a lot of time on the average work week. If I can go back and find that average work week, we're going to have ours in May. So I do spend a lot of times digging through the numbers of the average work week, hourly earnings, non-farm payrolls. I do spend a lot of my time looking at these charts that tell me or justify to me where our overall economy is going to be going, especially for the next month or for the next quarter. So I spend a lot of time digging into these numbers and trying to put, construction into how my Zions Bank is going to go, retail trading for retail numbers, financials. If financials are hiring like in February, that's when I started to get in and adding more positions to financials on the way down. It also helps me decide, hey, if they're not doing a bunch of hiring, maybe I'm going to lighten up a little bit. I'm just trying to correlate things that maybe, another professional in my position might go, Hurley, you're an idiot. And maybe I am. But you know what? It's worked for me and it's worked really well. So I'm doing the best I can to find correlations that'll justify where I'm at, what I'm doing. Consumer spending for GDP. Another big one that I spend my time looking at. And that really comes down to nothing more than, what was GDP last? Not to mention I have it all right here in front of me. GDP last came out basically the last week. So I pay attention to GDP and really in here, consumer spending. I want to know if we're all in the government that's putting all the money in, or if there's other information that's going to help me out. And I do my research saying, hey, maybe we're going to buy more iPhones. Maybe we're going to have less government spending, which means our GDP is going up because of consumers. There's just a bunch that I do in there to try to find correlations that will justify or help me justify where we're going and what type of market we're going to be in. Abraham, does that answer your questions? And if anyone else has any, type them on in. But this is my process. This is what I do. This is how I do my research. Always start Sunday afternoon. And obviously I'm looking at my stuff daily. I'm up early, checking the news, checking the economic reports, seeing what's justifying what's happening with the market to have an expectation for the day. And the neat thing is, on a day like today, I for all intents and purposes, I have a day off. I can go do other things like clearing old cottonwood and river birch and river oak trees to increase the pasture for the cows. On a nice up morning, I might go golfing and go try to find some more business and go fishing. Definitely, but fishing's usually done. I'm looking for an early Friday to do a 3-day weekend there, but yes, sir. All right, guys, so the short answer is this is my process. This is how I do what I do. This is how I get through some bad weeks, is doing nothing more than being prepared so that I don't necessarily get caught off guard. It's this type of research that, hey, if we're up at a bottom or a top, I'm not so surprised as we're going down. If we're within a range, I don't freak out on 700-point down days because we have the range that I'm in, and I'm not usually trying to catch tops or bottoms or bottoms. Would something like this freak me out and surprise me? Definitely. I'm not saying that because I do all this research and work that I still don't get caught off guard. But the beauty of collar trading is when we have some of these big drops, I was shorting a whole lot of short calls on that day. As we came back up, I didn't do a whole lot, but on our next down day, I started to take a peek and say, you know what, I'm going to add some protection. Going to add some protection because it probably won't get above that 50-day. Little technical analysis, little fundamental analysis, little reading of the charts, reading what's going on helps me weather the storms. Plus, I collar trade. As soon as I have my puts in place, I'm cheering for the stock to go down and lose half of its value before I'm cheering for it to go back up. I've learned over time, big, huge drops in stock, 20, 30, 40, 50%, are usually overdone. So if I have my stocks protected, man, I get to double up or pick up 20, 30, 40, sometimes 50% more shares of stocks. I love it. Always helps me out and benefits me a ton. Guys, I appreciate you being with me today. I appreciate walking you through this. I do hope this was helpful for you. I will get these notes in this video posted sometime tomorrow. Have a great week. Let's look at earnings to keep propelling us forward. And I look forward to talking to you next week. Good night, everyone. Have a great evening. Bye-bye.